they coalesce and decide to cooperate together. The guys on Wall Street bets just do it in the public completely transparently. In my opinion, that takes a lot more courage, because you could actually be wrong. Somebody can actually say, hey, listen, what you said made completely no sense whatsoever. And so what is the difference? In my opinion, this is the modern day instantiation of that dynamic, just writ large and at scale.
The only thing I'm concerned about is that there are inevitably going to be people who get hurt. I'm not talking about hedge fund managers. I'm not talking about them. I'm talking about the people who follow people into the trade, who think that this stock is going to continue to go up because that's what they've been conditioned to think in the pandemic.
What should we do?
Because all stocks go up, apparently.
What should we do? Not allow folks. Here's what will happen if you follow your logic, then you'll say, you know what? Retail doesn't know what they're doing. I think you're wrong. Then the thing will be retail shouldn't be allowed to participate in the stock market. I think you're wrong. And then you know what will happen, Scott? The inequality gap will grow and grow and grow. Because then what are they supposed to do then? Buy an ETF, a passive fund? They can't buy into hedge funds because the rules don't allow them to. So now systematically what you've done is you entrench poverty.
No, I mean, that's taking it too far. This is just accentuating those thoughts that Wall Street's a casino and nothing more. That's what this is perpetuating.
I don't think so. I think this is an example of if you are going to so massively oversell a company to the extent that you're selling 40 more shares of that company that don't exist, and all of a sudden other folks are like, hey, wait a minute, this is going to get squeezed, and they buy it, that's just a smart trade. Retail saw it. Wall Street missed it, and they paid the price. So maybe, to your point, Scott, what regulators should do is say, hey, wait a minute, how can we allow companies to be 140% short? That doesn't make any sense. Maybe that's what should happen.
You think this overall situation is fine for the market? I'm also curious as to, look, you have taken companies public through SPACs at a rate that others have not. You're relying on the integrity of the stock market itself to be able to do what you do and be successful doing it. You don't think what we're witnessing now calls into question the integrity of the stock market, that a lot of different stocks with seemingly no fundamental story behind them to this degree can see their stocks rise in this magnitude, and all of that is just fine? That there's nothing wrong with the integrity of the system if that is occurring?
The lack of integrity in the system is the precursor that caused GameStop to be sold short 136%, and for people to try to pile on and destroy a company in front of our eyes. That, to me, feels wrong. That feels pretty un-American, if you ask me. I think GameStop is a reasonable business. I think what they do is reasonable. And so the fact that they shouldn't be allowed to exist because all of a sudden, like, we decide that they should be obliterated into the ground.
Well, they should be allowed to exist. They should be allowed to exist at whatever their stock should be valued at based on what their earnings are. And the stock was like
free market
$17, $18 not that long ago.
Who says that? Who says that? Do you want to make the same argument about Tesla? It's gone 10x in a few months. You don't know what it's worth. Let's be honest. Okay?
You don't think that Tesla's growth prospects?
Scott, I have my own model for the company. I'm allowed to underwrite however I want to own it. Everybody that bought that stock is also underwriting how they want to own it. And the point is, just because you're wrong doesn't mean you get to change the rules, especially when you were wrong, you got bailed out the last time. That's not fair.
Yeah, but it doesn't mean that these investors who were short the stock were necessarily wrong. I mean, I still haven't heard you tell me what the fundamental case is for GameStop at $350 or AMC theaters, which have been closed for months and months and months, is worth what the stock's trading at now, or any number of these things, the way that they're trading. There's no fundamental reason why they're there. They're trading because there's this momentum cohort behind it, whether it's on Reddit or Robinhood or wherever else.
But Scott, why is that all of a sudden so wrong to you, this kind of momentum trading? Because, for example, if you look under the hood on every quant strategy, organized, quantitative, strategic hedge funds on Wall Street, those things are all momentum shops. They trade day over day, massively levered, small swings. So basically what you're saying is, hey, if retail runs a momentum play to squeeze a short, that's wrong. But hey, if Renaissance Technologies and somebody else does it, that's okay. That's what you're saying. You may not know that that's what you're saying, but that's what you're saying. And to me, that feels very unfair.
No. What I'm saying is someone's going to get screwed, okay? Someone's going to get screwed. And it's going to be it's going to be a retail investor who gets screwed because they think that this is the way the game works, that this is the new Wall Street. They're new to this game. Maybe they haven't been in the game that long. Not everybody, not trying to say that in any way, shape, or form, but somebody's going to get hurt. I'm not talking about the billionaire with the big house in the Hamptons. I'm talking about the person who thinks this is cool, fun, and an exciting way to spend their time.
I'm not taking away that there's an element of that, but you're really discounting how smart so many of these people are. Okay, and all I would encourage you to do is spend a little time in these forums, go into the Discord server, and you're not going to hear a bunch of bros just sloshing around. You're going to hear a bunch of really, really smart people talking about things in fundamental ways.
Chamath, don't tell me that yesterday AMC Entertainment was a $5 stock, and today it's up 170%, and that's justified. Don't tell me that some of these names are justified to being where they are.
Scott, it's one company in one moment of time. What I'm saying is
there's like 10 companies, 15 companies, 20 companies.
You're broadly sweeping with a broad brush that says these guys don't know what they're doing and they don't deserve to do what they are doing. And what I'm telling you is there is a small part of momentum, there is a part that's fundamental analysis, and then there's a part that's just sticking it to the man. I'm not taking you away from that. But the reality is it's all allowed in a free market. And all of a sudden, if you start to gate decisions by individual people, all you're going to do is systematically lock in institutional ways of making money for institutional clients. And I don't think that's the solution. If you want to go and address the solution, fix how risk-taking happens at the institutional level, fix the precondition, fix the ability for these stocks to be so massively shorted in the first place, change the business model of funds so that they're not forced to be these small net, highly levered funds. Change the leverage ratios. Those are all institutional decisions. But don't all of a sudden look at a short squeeze where money is being made by retail and all of a sudden say, hey, they could and may be the bag holder in the future, so let's make sure that they can never participate in the future. That's crazy.
Yeah, I mean, I didn't say that. I didn't say they shouldn't be able to.
You are saying that.
I'm not saying they shouldn't be able to participate. I'm not saying they shouldn't be able to participate.
You're saying they should participate on your terms.
No.
On Wall Street's terms.
No.
In a way where they get when Wall Street can have the best of it, they can maybe participate on the side. But then when Wall Street gets the worst of it, their parents, their relatives will just come and bail them out.
Not what I said. I'm glad they're participating. I'm glad they're making a lot of money. I just think it needs to come with a warning sign. There needs to be a hazard sign, all right? There needs to be a hazard sign.
The hazard should be, hey, FYI, for example, why isn't there more transparency in the reporting that hedge funds have to make? Every long position, every short position, and all the leverage they're taking every day. Why don't we do that? Then you would have a warning sign. You know why? Because people in retail would analyze that stuff so intricately, and we would know where the tripwires were, okay? The reason why GameStop happened, Scott, was not, again, because of a fundamental disagreement about valuation. It was because of portfolio construction arbitrage. Too much leverage, too much short selling, too many calls, too many put buying. All of that stuff contributed to this dynamic. That was an institutional dynamic that was created by institutional capital. So if you created transparency in reporting, that probably wouldn't have happened because a regulator would have said, hey, guys, I'm not going to let you be short 140% of a company. That's not right. And then you know what would have happened? This squeeze would not have happened. Now, so if you want to fix it, I think you got to go and ask for the same transparency because you can't all of a sudden have your cake and eat it too. Let's have hedge funds operate in the shadows, but let's then basically lambast Wall Street bets because they actually have the courage to write their stuff down publicly where anybody can see it.
I mean, look, my point is that I'm not lambasting anybody, okay? I'm glad these people are making money. That's the way it should be. That's the way it should be.
Honestly, let's face it. No, you're not, okay? And, the person that was on before you, no, she's not. And that's the issue. It's like because the rules are changing underfoot, people don't like that. Now, I'm not saying that there can't be better regulation, okay, and there can't be tighter rules. I get all of that. But what I am saying is that you have to be cognizant that we are moving to a world where normal, ordinary folks have now access to all the same information as institutional organized capital. And they will come to many of the same conclusions, sometimes at the same time, oftentimes faster, and sometimes to the opposite conclusions, and sometimes at the same time, sometimes faster.
Okay.
You will see more volatility like this in the future.
I want to see...
Solution, hold on a second. The solution to this is more transparency on the institutional side, not less access and ability for retail.
I want to see the white papers on all of these companies that are flying, and all of the deep fundamental research that suggests that all of these stocks, and there are way more than one, this is not one stock, one story, okay? There are a lot that are fundamentally challenged in this environment, right?
I'm sorry, but how, for example, if we went back to Herbalife, were you supposed to adjudicate that and decide that one short thesis was better than one long thesis? Who are you to judge?
No, that wasn't my job.
Well, whose job then? A regulator's job before they can put the trade on? What are you saying?
Don't come here and tell me that you're suggesting that all of these stocks are up because they're fundamentally in that place.
I'm saying you and I both know that there's a massive distribution of reasons why people buy and sell securities. There's some that are purely value-oriented, about backward-looking discounted cash flows. Some other people all think about future cash flows, future product innovation, future margin construction. Other people think about momentum, and that is allowed. If you look at hedge funds, there are strategies for any which way you want to play. Some folks only short companies. Some folks only go long companies. Some folks run a totally net neutral strategy. They all exist, and I think what you're seeing is a proliferation of that kind of diverse thinking and risk-taking in retail now. Because before, retail was largely known as long only. And now, for the first time, you're starting to see more sophistication in retail. And I think, again, I'm just predicting the breadcrumbs here, and it could be wrong, is that over time, retail sophistication will catch up to institutional sophistication, that the strategies that exist institutionally will exist on the retail side. And so my point in all of this is, if you want to make the system better and healthier, force more transparency on the institutional side. Gary Gensler should get these guys to be just like what Cathie Wood does in ARK. It's so healthy for the ecosystem. What am I buying? What am I selling every day? What are my risk limits? Just make it transparent. And these kinds of dislocations may or may not happen in the future, but if it does, it'll be completely transparent, and you will see it coming. Right, and there's nothing wrong with that.
Let me ask you this, because we've gone on for a while. Can you stick? Can you let me take a break and we'll come back? Stick around.
Oh, yeah, sure.
Stick around. Let me take a break. I'll come back. We'll have more with Chamath Palihapitiya in just a moment. We, of course, will talk about Apple looking ahead to